All right, guys, what is going on? What is good, chat? Hope you guys had a good weekend. Welcome to Market Maker Monday. All right, Market Maker Monday. You guys ready to learn something today? Oh shit, that was loud. Sorry, I don't know if you heard that. You guys ready to learn something? Drop some ones in the chat, baby, if you are ready to learn something today. Right? Are you ready? Are you ready, kids? Let's get some aye captains. I'm just kidding. I watched so much SpongeBob as a kid, you know what I mean? So you can't not hear it, right? When somebody says, "Are you ready?" You're like, aye captain. So black flags in the chat. Thank you, Mason. Thank you. Good afternoon. It is the afternoon, you're right. Wow. Well, we won't talk about what time I woke up today. Let's get right to it. Let's get Marshall, Sean, ER, right? Mason, Densley, Soul, Cameron, H, Capitalist, Felix, Patch, 2020, Mark, 23, Marshall, Edmundo, Julius. I don't know why the name Julius reminds me. I've been rewatching Spartacus, actually. I don't know why. I used to think Spartacus was such a good show, like 10 years ago. And I've been rewatching it, and I've been realizing how cringy it is and how bad the CGI is, but it's been entertaining to fall asleep to. But anyway, Cameron is, excuse me, long Dow from 46,504. Okay, not bad. I mean, yeah, it's not terrible. I said this in the Discord earlier. The high of the day, to me, seems engineered, but my least favorite thing about Dow is the weakness, right? When you look at, let's say, NQ, for example, mega monster. Love that. Stocks are up today, baby. Right? Now, right around 9 o'clock, we can definitely see a difference here. Or, sorry, 8:50, right? Random time, chat. Random fucking time. Right? There's no algorithm that runs for stops, right? But yet, what do we see? Right? What do we see, chat? I don't know. You tell me. You tell me what we see. If we mark up this imbalance, honestly, whether we include that gap or not, either way it goes, clean that up. Right? Clean that up. Beautiful. So, NQ, ES printing new highs, and Dow sort of sucks, as per usual. So, Dow to me is playing catch up. It's playing caboose, basically. So, move your ass, Dow Jones. Move it. What's good, Torty? Just put my question. Is there an opposite for low, high, higher, low? Oh, Jesus. We're getting complicated today. We're getting too complicated. Gene. Low, high, higher, low. Okay, cool. I'm not fully awake yet. I haven't had all my caffeine yet, so we're going to have to... Low, high, higher, low. Is there an opposite for something like this? Is that your question? Making me work hard 5 minutes into the stream, dude. Fuck me. So your question is, this functions like a mitigation. Is there an opposite for it? Is that what your question is, Gene? What's good, Oscar? Stay disciplined and didn't trade Monday, even of the holiday. There's no problem with not trading. It's just if you not trade every single day and you never trade, then that's when there's a problem. It's good, Sergio. Okay, so I'm going to show you a really cool feature. Are you ready for this? Complicated stuff here, okay? Watch this. If you take a concept, all right, and you draw it out like this, every concept can be inverted. Every single one. All right? Maybe not the inversion, because an imbalance or gap can become inverted. After that, I don't think the inversion becomes an inversion. That's probably like reclaimed, but I don't really do that. But for the most part, I guess with the exception of that, everything else has an inversion, okay? So watch this, right? The low, high, lower, low formation. I believe we saw that on Friday. I think I tweeted one of those last week too. So, right? My genius is coming out, right? Watch this, okay? It takes a genius to know this. You ready for this? Whenever you have a concept, if you draw it out on your chart, right? Watch this. You go to your settings, okay? Or you can do Alt-I. Right? Now watch this. Woo! Spooky. Inversion. Right? The chart becomes inverted. So then look at that. High, low, lower high. Ooh. Genius shit. Okay? It takes a genius to know that. Alt-I, baby. Okay? So now you're all Einstein now. You are all Einsteins now. We are all geniuses, okay? We're some rock stars, baby. We are some rock stars. Because it is a green day, isn't it, chat? Did y'all, I mean, listen to me, chat. Listen to me for a second. Let me ask you this. Who has better titles than me? Seriously. Okay, who comes up with better YouTube titles than your boy? There might be a couple, but like honestly, I pride myself on that. Okay? You thought I prided myself on entries and shit. I pride myself on the titles, man. Like seriously. I don't know how I come up with this stuff. It ain't drugs. Okay? It may be the high from really fucking awesome trading, you know? I was actually going to play some Green Day leading up to the stream, but I was not feeling rock music today. I just wasn't. Wow, Edmundo, that's crazy. You're blocked. Forever. Been killing the title since IML days. Thank you. I'm glad someone's been around for a while. But yes, coming back to what we were saying. Yes, concepts can be inverted. The formation, you could say, the models, you could say, can be inverted, right? We have market maker buy model. The inverse of that is the sell model. Okay? So does that answer your question? I don't really have a name for it because I'll put it to you this way, okay? If you go online, a lot of traders will call this, I call it a mitigation. A lot of traders will call it a breaker. Okay, the low, high, lower, low. And then we trade through it you know, back into either that up candle or a series of up candles, and that is a breaker. They will call this a mitigation. The low, high, higher low, that is what they would call the mitigation. Okay, so remember, and we've covered this plenty of times, but the only difference is one of them has a I can hear my music, it's insane. One of them has a lower low, right, which is basically the sweep on liquidity, and the other one has a higher low. Okay, and it would be no different again if we invert it, where one of them is going to have a higher high to go lower, and the other one's just going to have a lower high to also go lower. The higher high to me represents manipulation. That's what I believe it is. And the lower high represents weakness, and you usually want to short weakness. They're both shortable for shorts, and they are both longable for longs, or they're both buys if you want to go long. So hopefully that answers your question. Pip, I think that's how you say it. Pip Trades said, John, watching your MMXM masterclass video helped me a lot. Literally saw everything on Dow 30 seconds. Thank you. Well, you're welcome, my friend. You are welcome. But I only stand on the shoulders of the ones who came before me. So, yep. I may have taught it to you. Does not mean I invented it. Because I did not. And I've always said that about MMXMs. In all fairness, if MMXMs were not shown to me, I probably never would have found it on my own. That many stages, the order of models, stuff like that. Well, the order of models, that was sort of like self-discovery. It doesn't mean that I created it. I just happened to notice something that was already there, if that makes sense. But self-discovery is how, this is my opinion, but self-discovery is how you learn it way better than somebody showing you. You know what I mean? Who taught me the MMXM? Well, I'll put it to you this way. I was introduced to MMXM by ICT. Okay? I would never try to hide that. But I've talked about this before. The problem, like if you go to Google right now, this may not work because this stuff has been out here for so long, but back in the day, like 9 years ago, 10 years ago, the problem, and obviously like we all have AI shit now on our computer, so it summarizes stuff, and again, this was not around 10 years ago, so it wasn't like how it is now. But in short, the way I was introduced to it was like this. Okay, not all this other shit. I don't know what this website even is. But this right here, like this is what I was shown. Does that make sense? It was just, hey, this is the sell model, right, from ICT. Again, I'm not hiding that. But this is what I was given. It's like consolidation, accumulation, no reaccumulation, right? And then distribution, redistribution, and then second stage lower. This is what I was given. This is what I was provided with. And again, and not to talk shit, but this to me, in this particular form, okay, a lot of people say, oh, this is Wyckoff. It's not. Where it does, and where the problems that I have with Wyckoff, just like this, it's too generalized. It doesn't have specifics. There's no time windows on here. There's no details, right? There's no entries or stops or concepts or anything. It's just the general roadmap. And what I do, and this is why you see the masterclass how it is, I'm giving you way more details. I'm giving you a lot of self-discovery and a lot of things that I had learned basically from the time I was introduced to that in I think it was 2016. Late 2016, maybe early 2017. I don't know. It's been a long time. Okay. But 7-8 years, right? You learn about, or at least how it was for me, I learned about each individual stage, each individual concept, and then trying to put it together like, okay, I would notice, hey, the manipulation, right? Then low risk buy, then accumulation or reaccumulation. And when you start to see it happen over and over again, you just get to that conclusion like, oh, this is always in order. Manipulation always sets the low or the high. The low risk short or low risk buy comes after that, and then so on and so forth. So when you see it, like say for the first time, and it's like a light bulb moment, like, oh, I wonder if this is a thing, right? Drop some twos in the chat if that's ever occurred to you. You ever saw something in the chart and you're like, I wonder if this is a thing. Buying below the open of the hour. That was a thing for me. I'm like, I wonder if that's a legit thing that is tradable. Like, if the hour is supposed to expand, I can just wait for the hourly open, wait for it to trade lower, buy it, and then, you know, wait for 60 minutes or 45 minutes or whatever, and see that hourly expansion. Like, is that a thing, right? And then you start seeing it over and over again, like, oh, I'm bullish during lunch or I'm bullish during PM, and well, what do you know? It goes lower and then it rallies. And it's like, oh, okay, now I can actually trust it. And I see it happen over and over and over again. Okay, listen, I keep telling you guys, I can show you a lot of stuff. Other educators can show you a lot of stuff. I mean, the internet's full of streamers and teachers and educators, whatever, notes, PDFs, Google images, you know, Chat GBT. I wouldn't trust chat, but you get what I'm saying. There's a lot of information out there. But nobody, myself included, obviously, nobody out there will teach you more than the charts. Your results will show you who you are. The impatience, letting winners run too long or cutting winners too short, allowing losers to run for too long or whatever. It'll show you all that stuff. The charts will show you and teach you more than I ever can. Okay, I can show you the way. I can tell you, hey, that's an engineered high. As we're trading lower, basically means I'm fucking bullish, right? And then we see the market. It ain't doing it yet, but we do see the market trading higher, right? I can do all this stuff. But the point is not independence. We're just going to rely on John. Don't do that. Allow me to show you things and you decide whether it's worth learning or not. We've had people quit. I've had students that don't watch me anymore, and that's fine, right? So, you know, you do whatever you want to do. It's your career. I can show you things, but you're not going to internalize it until you trade it, until you watch it, until you study it. This is why, ever since you came across me, probably for the first time or within the first like 5 to 10 streams, I have said, print off charts, get a journal, you know, take screenshots, mark it, look at it. We've even done a few studies here before, right here on this YouTube channel. We spent an hour on one single chart. You've never spent an hour on a chart before, have you? No, John, you know, I look at a couple things and then I get bored and I gotta go scroll on TikTok because my fucking brain is fried. I don't know what to tell you, bro. I tell you to stay off TikTok as well. You just don't listen. But, you know, the point is, at the end of the day, no one is going to be a bigger advocate for your education than yourself. Period. Okay? You need to have self-discovery. You need to learn things, or you need to, like, find things that either somebody may have kind of led the way there, or may have said one time, but like, you investigate, bro. You investigate. Come to your own conclusion. The problem that I have, and the reason I start making fun of people, is because they say that things don't exist. Perfection doesn't exist. I've shown it. I've traded it. So you're a fucking dumbass. Like, straight up, bro. There's no perfection in trading. I've shown it to you. And traded it. Macros don't exist. Okay. What's our low of the day? 850. 8 fucking 50. That's our low of the day. And you're telling me macros don't exist? Okay. Now you're just stupid. Now you're just a fucking retard. Outside of those things, though, okay, you need to search for how markets work, how price is booked. Is it manipulated? Is it not manipulated? Is it a free market or is it controlled? Is it random? Or is there an element of predictability? Do macros exist? Do macros not exist? Is there a such thing as perfect trades? Or is there such thing as perfect price delivery? These are things that you should answer on your own. You know my fucking answers. You know what I think. Okay? So, you know, anyway, I don't know how we got here. I don't know how we got here, chat. You always do this to me. You always do some weird shit. Weird stuff. Sorry, I'm still working on it. This is more fun. Thank God I never created TikTok. I actually uninstalled TikTok like a week ago. So I uninstalled Threads too. The Instagram partner or sub, whatever it is, like the Threads app. Yeah, I uninstalled that too. I'm like, this is fucking stupid. So what other questions you guys got? We're almost halfway in, halfway through the stream here. But you know, what do you got? What do you got? Oh, I did not see that. Oh, I did not see that, chat. Wow. New model. You ready? The mitigation, but there's no imbalance, but we do have a suspension. Wow. Here I was trusting the mitigation, and I could have trusted it even more so. Suspension. Wow. See, I don't always see everything. He said, great start. What does that mean? What does that mean? So far, we went over the mitigation, like the inversion. There's the breaker and there's the mitigation. They both are a function of mitigation. That is their function. Okay. They are both bullish, right? Both of them, whether you have a higher low or a lower low. Now, in fairness, just based off of, you know, the last decade on my own here, the lower low, I trust that more than I do the higher low. I just trust it because the manipulation, it's like, okay, we're not going back there. We might retrace, we might, you know, retrace some, we might trade into something, but we're not going to that low ever. Or at least like for today, like obviously. So I have an easier time trusting this than I do that. Unless I'm like really convinced. Like if ES is lower and NQ is higher, yeah, I'll probably trust NQ in that aspect. But only because NQ is in today's world typically stronger than ES because it's the tech heavy sector. But outside of like that specific scenario, I trust the manipulation low. But and I always say this too, I'm giving you my opinion on things. Okay. You might think differently. You might think, well, you know, I understand manipulation, John, but I like the higher low. Well then go with that, bro. Go with that. Oh, how do we get here? But I've been all ears, so it's a great start. I'm behind, so my message was late. Oh, blocked. Blocked and banned. Knocked out of Dow plus 3%. Oh, nice one, Cameron. Yeah, if we trade all the way back down to this low, or like to these lows, I'd actually be a little shocked. But, you know, you see how, we'll say like minor, right? These are minor retracements in NQ. This is like a minor retracement in ES, and Dow still hasn't even made a new high of day. The pullbacks in the weaker markets are going to be deeper. So it's not a like entirely a surprise, but to me, we should see speed here. We should not do this. We shouldn't create an engineered high and then pause just prior to that one too, and then trade all the way down here. Like, I don't think we should do that. But guess what? The market's going to do what it's going to do. The market's not going to do what I want it to do. I would hope so, right? But hope's not a strategy. Okay? We have to align with price, not the other way around. Mitigations are strongest / most important from the higher time frame price movements, as in new highs and lows. Okay. Price is fractal. What happens on small time frames happens on medium time frames, happens on high time frames. Maybe not like the yearly chart, the 12-month chart, that's a little too much, but I'd say like a weekly, daily. Okay, same thing is going to happen there as a 15 or a 5 or 1 hour or a 1 minute. Okay. When it comes to, let's say, your verbiage here, strongest or the most important, okay? The strongest ones are obviously going to be when you align the small time frame with the higher time frame. When you align the smaller time frame with the higher time frame and you trade the strongest one, those are going to be your bangers. Those are going to be your hot damn, I wish every trade was like this. The one trade, you know, that, or like say the one you don't take, right? It's like, oh man, the one I didn't take was the banger. Right. But what a lot of times happens when you don't take the trade and like it's a really good one, right? And you go, well, how was I supposed to know? How did I know? You know what I mean? Like, oh, I wish I should have taken it. Well, why didn't you though? And I think the biggest reason is because you didn't look at the higher time frame. You didn't look at it. You stayed on the smaller time frames, and you know, you didn't really feel good about it. And it's probably because you didn't see what the higher time frame was up to. The same way last week, Twitter was thrown off. The markets are trading lower. There's no earnings. There's no rate announcement. There's no Trump. No this, no that. What's going on? What's going on? The market went lower for FAFO Friday's low, like we said the day prior. And possibly earlier in the week. I don't remember. Right? Because a lot of people don't work with the right information. They don't understand imbalances in liquidity. They don't understand like higher time frames, right? Or they might understand higher time frames and that they're important, but don't know how to, let's say, analyze a chart with high probability. So then they don't get it. Well, if anybody was short, you're a genius. I'm not a genius. Okay? I'm not a genius. I'm facetious about it because people are stupid and want to hit my inbox on some tomfoolery shit. You know what I mean? That's why I do that. That's why I talk shit, because I know it bothers people. I don't give a fuck. You know what I mean? I love it. Hell, it's marketing shit for me. If anything, you're doing me a favor. Keep talking shit. I love it. I'll keep putting it on my Instagram story. I don't give a fuck. Because they don't get it. I am not a genius. We probably don't have any geniuses in the chat. I'm sorry to hurt your feelings. None of us are probably geniuses. It's probabilities, bro. It's probabilities. The market is likely to do this or it's likely to do that. Guess what? If you can't form a bias or a narrative, if you can't, come to a conclusion with high probability, then it's probably low probability. You probably shouldn't take a trade. You probably shouldn't tweet. You probably shouldn't do anything. You should probably wait. Right? There's that P word again, patience. You should probably have patience. Okay? So that's why I love Twitter too. It's like, bro, how did you guys not see that coming? How did you not see it? Baffle Friday's low was right there. October's low was right there. How'd you not see that? Because that's not what they're looking for. God knows what they're looking for. Who knows? Probably a MA crossover. Probably, 80-20 RSI shit. Probably Bollinger Bands. But it's at the lower band, bro. It's still going lower. Right. October's liquidity is resting right there. But you don't believe that the markets are manipulated. You don't believe it's controlled. You think it's a free market. Right. Flawed thinking. Your first principles are flawed. You don't even have the right mental models. You don't have the right trading models. You're working with broken tools, and you wonder why your analysis is broken. I can't help you. If you're not willing to learn, I cannot help you. Just like Epictetus, right? 2,000 years ago, the slave who had his leg broken, walked with a cane. He was a slave until about my age, 30s. He was a slave until he was 30 something. He opened up a school, taught a lot of philosophy, and one of his things, he probably said this in the beginning to his students, but it is impossible for a man to learn what he thinks he already knows. If you think you know it, then you won't learn it. And that's true. Some of the stuff that I do nowadays, I used to think was stupid too. It was not the concepts. It was not the timing tools. It was not the person I was learning from or the YouTube videos I was watching or the books I was reading that were stupid. Some of them are, but generally speaking, it wasn't them. It was me. I was the stupid one. I was the one that had blinders on. I was the one that let my ego dictate, what I wanted to learn or not learn. So let that, what do they say? Let that marinate. Let that marinate, chat. So there you have it. If you're not willing to learn, don't be here. Because I promise you, you're gonna hear things from me that go against a lot of what people like or trust. I don't believe this is a free market. I don't believe this is free at all. So there's that. Dow doing Dow things. Yeah, that is true. I agree, Mason. They are there, especially in regular trading hours. I was hoping, right? Again, hope's not a strategy, but I was hoping we would jam this engineered high, right, on the stream, but it doesn't look like we're doing that. It doesn't look like we're doing that. See? The market knows. The market knows, Chad. The market, it knows. I don't think we're going to get up here today, but we do have some highs up here. And I like those highs right here. See that? I like that. Should we stop or should we trade into that and then reverse lower? I don't think so. I don't think so. The next imbalance is going to be right there. The next gap is going to be up here, like 850s, 860s, 870s. So I don't think we're going to beeline. I don't think we're going to, print one candle or like one Corvette candle to go up there. I don't think that's going to happen, but I'm fairly bullish. Mondays like this can be a little bit difficult because if you look at it from a weekly perspective, right? Monday is our Monday open, but it's generally like a weekly open as well. So we can be bullish. Okay, great. But if we don't have a lot of movement below the open, right? If we never get our discount to go higher, sometimes this can be a little bit more difficult. But again, the market's going to do what it's going to do. I do not have sway over any of these movements. But yeah, this is pretty clean too. From Thursday's rip ass that caught everybody except me, except you, off guard, right? Everybody was caught off guard on that. Okay. So anybody who did short or is still short from over the weekend, they're probably going to have stops up here. So yeah, overall, fairly bullish. Now, what do you do, let's say, from here? What do you do from here? With NQ? Nothing. Nothing. I can absolutely not justify buying right here. I know how to buy late into a move. I know how to short late into a move. When it looks like this, though, no. I'd rather just let it go. Okay, if you're not in from like this morning here, right? Like this to me, remember that, remember 850 and ES was lower right here? You see that? Once you see that, and we trade, let's say 9 o'clock, right? This right here is beautiful because, and this is hindsight, obviously. We were not in front of the charts. I was not in front of the charts right here. But when you had this divergence here, and then we traded through these down candles, like, bro, that's when it gets really beautiful, because those down candles, prior to that move up, also 9 a.m.'s open, like that is a good long. Okay, this would probably get some traders out if you went break even too fast. Okay, I've done that before. Down candle here, gets traded through. Boom. Sends price higher, imbalance higher. So like if you're not in from anything down here, meaning let's say on a 5-minute chart, this imbalance, or these down candles, or like that down candle, which is again a little bit later, it's not terrible, but if you're not in from something on that, like this being up here, yeah, I would not do anything. So all right, let's see if we can finally get our fucking run. Let's see if we can get our run, chat. Where's Cameron? Where's Cameron? Are you still watching, Cameron? I don't know if he's still here. I do not know if he is still here, but that's what happens. We spend all this time on one chart, then we go look at another chart, and that's when the market's like, all right, now we're going to run it. See, I know how this stuff works. I know how this stuff works, chat. I know how the bamboozlers be bamboozling, okay? I know it. Any thoughts on Meta? I don't, bro. Honestly, tech, and this is what I think is going to happen with AI in the next couple of years, is tech is so volatile. Ugh. Once the move happens, it's like, just like with NQ that I showed you, once we get a nasty move higher, if you're not already in, it's too late, bro. It's too late. I'll pull up Google here in a second too. So I'm very grateful that my long-term account I did not get out of. My active one I did. I definitely, that was the biggest, I would say, face plant of the year, was getting out at Google somewhat near the low of the year. That's a big fucking L on my part. But the long-term stocks account still has it. So at least I got a little bit of it. Is there a video on back testing market maker models? I don't think so. There's the masterclass video. There's the 48 laws of trading, which has a little bit on market maker, but I believe in 48 laws. I show you like an introduction. Like I show you the drawing, and I do cover the law of the return. I don't know if there's much more than that. I'm basically like, look, if I tell you about all this, it's going to take an hour. So just go watch this video instead. And then I go to like the next law. But I think that's it. But I do think forward testing and journaling is nice. Julius, there's a reason that I do 2 market reviews every week and that they're members only. They're short. 98% of them are very short. They're going to be 10 minutes or less, or maybe 15 minutes or less. Very few market reviews go over 20 minutes. And they're there to just give you the juice instead of like a live stream that you got to rewatch. It's an hour long, right? But the market reviews, they're quick. So that way you get the juice, you move on. And that's why I do that. So there's plenty of examples to go through. I'll be honest though, mostly indices. All right, mostly gonna be indices. But you'll see me talk about JP Morgan like 160% ago. Right. We talked about Google, talked about a lot of things like years ago that are nowadays they're like, oh man. So a great question. But anyway, coming back to what I was saying, Felix, the retracements are deep, which is very volatile. Like Tesla's a really good example of that. And I would say you really have to have some conviction, buying a stock after it's dropped like 50%, 25, 30% or whatever. Like for a blue chip stock, it's pretty heavy. But in tech, like, okay, it could still go down like another 10, 20, 30% or something, and that's a lot. So the moves are nice, right? The moves higher are nice, but the moves lower are pretty steep. So it's not always my favorite. Camera's lagging behind. It's all good. See, now it wants to form like this big ass flag here now. Ugh. Right? Like if we trade back lower and here again, then it's like going to form a big flag. I don't want that. I really don't want that. I want this thing to just jam higher so we can just be fucking done. And the 1 p.m. macro is coming up. So we'll see if we can time the market. We'll see if the market is timable and predictable. We'll see it. Maybe. It is quite possible. Ooh, speaking of books, did you guys watch my latest video? Is Mike on YouTube or was this like somewhere else? You guys did watch that video? Yeah, dude. I thought I finished less books than that. I thought it was more like 5. And then I actually made a list. I had to check my book page too. And I was like, oh, wow, I've actually read way more than 5. It was like 20. Oh, Instagram Live. You forgot the tier list though? No, that's going to be a different video. That's going to be a different one. Like S tier, A tier, B, C, and probably D tier. You want the mental models next? So There was one I couldn't review because it was a Kindle. It was a Kindle one. I wasn't gonna bring my iPad or my Kindle. Like, I just wasn't gonna do that. But yeah, there was three books on mental models that I read this year. Wait a minute, it might have been 4. Do we have time? Yeah, we got time. Okay. The Great Mental Models from Shane Parrish. Wonderful book. Wonderful book. Philosopher Mental Models, Peter Hollins. Shit, I gotta look at my... It's a bad look, isn't it? Like, John, you read the book, but you don't remember the title? No, I don't. Because... Actually, it's a digital one. 2025. Poor Charlie's Almanac. I started reading that one. I haven't finished it. Oh, okay. I lied. I read 21 books this year. Mental Models by Peter Hollins. 30 thinking tools that separate the average from the exceptional. That one was all right. And then I read Super Thinking by Gabrielle Weinberg and Laura McCann. I read 21 books this year. 4 of them were on mental models. Big flex. Big flex, chat. Did you knock out recursion? No, I haven't started recursion. I'm still in my book writing mode. So I'm still in like the personal development mode right now. Because the more books I read, like the more richer that mine becomes. That's why I haven't put it out yet. That's why I can't. Like, it just becomes better and better and better. So eventually I'll have to say, okay, this is enough, and just give it to you. But not yet. The science fiction, the philosophical science fiction, like the novels and stuff, or the novellas and whatnot, that's going to be for basically next month, like December. My trading's going to slow down. And I'll be able to actually focus on reading, you know, without worrying about the charts and, you know, stuff like that. I mean, I could do that now, but I just know December is going to slow down. My trading is going to slow down. So I already know going into it, like, okay, this is what December's focus is going to be. Recursion, the word for forest, or the word for world is forest by Ursula Le Guin. There's another one from Ursula Le Guin. So I'll probably read more of Kafka as well. Do you mind sharing the site for those used books you purchase? Yeah, sure. It is thriftbooks.com. What's really cool too is they have a rewards program. So after you spend a certain amount, or you buy a certain amount of, like, a number of books, you end up getting like a free book sometimes, which is cool. So yeah, it's thriftbooks.com. I believe that's actually where I bought my first book, if I'm not mistaken. So, but I will tell you this in closing. I will tell you this. Don't get there's classifications, right? There's like new, very good, good, acceptable. Never get acceptable. Never. It's going to be fucking missing pages. It's going to have like drawings and dicks in there or something. Don't do it. Okay. If you can, try to get very good or like new. Okay, good at best. Like if you find a book and it's like a good one, I guess, but listen, there's been a couple times I've bought in a book, you know, it goes from page 87 to 113. That was how the guy who sold us for the monk who sold us Ferrari, that's how that one was. I got near the end and then there's just 20 missing pages missing. I'm like, okay, well, this is wonderful. Now I gotta buy a new one. So it only happens sometimes, but just know you're gonna be gamble a little bit. All right, you guys like to gamble? No problem. Then get all acceptable books, and you tell me. You know what else? You know what else I like about used books too? Is you find the weirdest shit that people use as a bookmarker. People's receipts. I've seen like at the beginning of books, "Happy birthday, Mary," or whatever, you know, with love from Grandpa, 1989. It's like, damn, your grandpa gave you this book and you donated it, or you know, like you got rid of it. Like, oh, that's crazy. I've seen some wild things, bro. Crazy stuff. So that's pretty cool. You never know. But there you have it, thriftbooks.com. Trading in the Zone. Arguably the greatest book on trading that I know of. Cards, pieces of paper, anything I can use at the time. Yeah. All right, well, we have done a whole lot of nothing on this stream for Dow Jones. 12 o'clock is when our stream starts. Here is where we are. And this has been our range. What a fun day. 1 o'clock is right there. Right? When you don't go to Terminus and you consolidate. Well, I guess the markets can't be timed then, huh? I guess not. Dan, it's hard to say. There's only, let's say, 5 weeks left in the year, give or take. 1, 2, 3, 4, 5. Yeah, there's about 5.5 weeks left of the year. I'm not gonna try and pick the high of the year. I don't try to do that. Generally speaking, and this year has kind of been different from most, but generally speaking, seasonal wise, stocks usually rally into the end of the year. So given that we just took October's low, right? So we took last month's low, and we have some highs on the upside, we have some gaps on the upside. I might lose power because it is thundering. So if it goes out, just know that's why the stream ended. But stocks usually rise into the end of the year. We just took a high pool of liquidity, or higher time frame pool of liquidity, and we have some solid upside targets. So they could be done going lower. Look, it's all probabilities at the end of the day. All right. So I think they could be. Am I 100% certain on that? No. But I'm long stock. I got a lot of stock. So if I was worried, if I was panicking, I would just sell all my stock and go cash. But I'm not doing that. So hopefully that answers your question. And yeah, trade. I do. I'm not going to just take the whole month of December off. Okay? I'm not Twitter. I'm not like Twitter. And never trade. That's stupid. So, all right. Well, with that being said, that is going to be it. The second half of this macro, I'm not going to stay for, which is only going to be like another 10 minutes. But The 46,656 level is, I want to say, the high of the 21st, right? So Friday's high is that particular high. So I'm going to probably say 680, right? 46,680. And which is another reason why earlier I said this is probably an engineered high, right? A high just prior to a higher pullback, really good longs in here. This is not good. This is not good. Okay. The less time we spend not going higher. Okay. But if you're in from the suspension or from this retracement back into the mitigation or this down candle or anything in here, it is closer to its target, but I wouldn't want it to come back into anything in here. This retracement, I think, is okay. We should not go lower. The market's kind of playing games a little bit, but I think this wants to just blast off. Thank you for always responding and being so thorough, John. I appreciate you. You're welcome. You are welcome, chat. I care about you guys. All right. I care about you guys. Sometimes I might rant a little bit. I may go, may go off script. I may not have anything for you. Sometimes I'm looking at the markets and I don't see anything. There's only so much I can do. But I do my best for you guys. So hopefully that is appreciated. But that is all that I got for you. 46,680. That's all I'm concerned about today. Don't care about currencies. Don't care about dollar index. It's only Monday. You know what I mean? We got the rest of the week and all that. So go read a book. Go review your notes. Print off some charts. Be productive. Can you guys hear that? Can you hear the thunder? Or no? I've actually got the window open, so you might be able to hear it. The mic also has a limiter on it, so it doesn't hear stuff. Like if I farted, for example, you probably wouldn't hear that. You did hear that one? Yeah, that's some loud stuff. So actually, I'll keep it here for just a minute. If you guys want to go, you can go. The stream's pretty much over, but I guess I'll give it another couple minutes then. That's fine. Unless the power goes out. If the power goes out, then that'll be out of my control. Both, Julius. Both. Gold futures, dude, are a lot. It is a lot. Okay. I holy shit. Dog, that felt like it hit my fucking tree. Bro. What the fuck? I usually, Julius, feel a lot safer trading the micro gold than regular gold. Okay? Unless you're, highly convinced and you got a low risk. But otherwise, I'm going to be more comfortable with the micro gold. So, all right. That'll be it. Y'all be good. Be blessed. And I will see you tomorrow. Same time, same place, right here on YouTube.
Ne yaptın benim için bugüne kadar, soluma dikenler yak. Beni yak, beni güne çevir ya. Yak.